Really am going to keep it super quick today. I'm speaking here in uh, about an hour and a half, 2 hours, at a multi-speaker event. I'm going to talk about Forex and talk about the exact strategy that we show here every single morning, show the consistency of it. So anyway, if you want to join me, do that. There's a link on the Make Money From Your Laptop Facebook page. You can hit that link and register. If you're there by 10 Eastern, you'll get to hear me. If you're not, there's other great speakers as well. I'm sure it'll be recorded and recordings will be sent out as well, so you can go through that and get some great tips and techniques for trading. It's really important to spend some time listening to other people. I've been doing this for, well, how long has it been? Since 2008. Trading Forex with this specific method since 2012. I always listen to other people though, because there's always a tidbit or two that you can take away from it. And especially when you're first starting out, I know I'm kind of back and forth on that, because when you're first starting out, I think it's really important to find a plan and stick to it. But if you don't know what your plan is yet, or if you don't know what trading style or what trading methodology really speaks to you, listen to some different people, and that way you can get different trading ideas and test them out, or maybe you do a blend of those different systems and create your own. It's very important to create your own method, and then you can back test and do all the things I've been talking about before to create that plan that you can then follow every single day. Anyway, let's get to this. I want to get through what we're going to talk about today, so then I can get off of here and kind of prepare for what it is I'm going to be speaking about later on. Let's start with the Forex market. Looking at what's happening for the day, we certainly see there's been, some interesting movement. The euro and the USD are both weak currencies as compared to the others, especially over the last few hours. USD has been pushing weaker, yen has been pushing weaker, euro has been pushing weaker. The USD and the euro are definitely our two weakest currencies. So we'd be looking for things to potentially pair those against. And one that really stands out here, you've got the New Zealand, the Aussie, and the CAD all as stronger currencies as they relate to each other, right? But the one that really stands out for me, in looking at this, is the euro versus the CAD. So we've got the euro down here, the CAD, nice divergence between those two. Even the CAD versus the yen, it looks pretty good. All of these are seemingly good opportunities, and mainly because we've got the divergence that we're seeing here. We've got a strong currency and a weak currency that we can pair together. But then as we go to the actual chart and have a look at what's happening with the euro versus the Canadian, for example, we see that there's been a nice steady downward trend on the shorter term. This is a 5-minute chart, obviously, but a nice downward trend. We've got our volume detail that's supporting the sell side. And when we look at the current day range, we've moved 60 pips, and the average is anywhere from 100 to 140. So certainly there's opportunity there for us as we look at that. So I'm comfortable with going ahead and entering a breakout trade on that. So if we break through the bottom of that box, which we have, broke through the bottom of that box, it touched us into that trade. So right here, broke it through the bottom, touched us into that trade, and we'll see what happens. But it certainly has all of the makings of that right opportunity that would give us the ability to have a trade move and potentially continue on in a manner that would set us up for a potential win there. Again, as I've always mentioned, as I mention every single day, just because certain things happen doesn't mean your trade is going to be a win. It means the conditions are there to give you that positive edge, right? That's all we're looking for. We're just looking for an edge, something that says, hey, if these things occur, then there's a higher probability of this, moving or continuing in this direction or moving in this direction than if I just, threw mud at a wall, right? Where everything that we do, any filter, and I know I'm reiterating things I always say, but that's just consistency is the truth in trading. It's all about consistency. You can apply any filter to it. There is no filter that's better than the other. Any filter you want. You could use moving averages, you could use Bollinger Bands, you could use Ichimoku Cloud, you could use Fibonacci's, whatever that is. Any of those indicators are just a filter that you're laying over the market. And as the market interacts, through the lens of that filter, you're finding opportunities to potentially trade, and that's giving you an edge. And you might use multiple filters, and when everything is able to be seen through those multiple filters, then that goes bling, there's a tradable opportunity, and that's simply saying that you've got an edge at that point. And as long as you exploit that edge over and over and over with good money management, then you're good to go. I mean, you can have bad money management, bad mindset, and you can blow that edge right out of the water. Won't matter. So anyway, we'll let that trade go. It ticked in and moved like a pip or two in my favor, ratcheted off a tiny bit of risk, but certainly certainly not enough to really worry about yet. So we'll see what that trade does as it moves on. Over here in the futures market, let's go to this other screen right here. Did I get you there? No. Yeah, I've got you there now. Over here in the futures market, what's going on? Looking at bias on these, everything has moved to an upward bias now. So 4-hour bias on the S&P is long. The 30-minute bias is still long. Looking at crude, the 4-hour bias is long, the 30-minute bias is long. Looking at gold, the 4-hour bias is long, the 30-minute bias is long. The S&P came yesterday, up to what had been a previous high, and retracted off of that, bounced off of that. So we'll see how that goes. This 29.40 was definitely a key level for us. We played with that level pretty much all day yesterday, into the day, a big sell-off, and now over the off trading hours, we've pushed back up and we've cracked back above what had been that previous high. So certainly 29.40 is an interesting number for us. We'll keep an eye there. Looking for long trades here in the S&P. I know a lot of people, there's a lot of, two sides to every story, a lot of opinions out there around what direction the market's going to move. What we don't want to do is form an opinion and trade our opinion. We need to trade what the charts are telling us and trade what our trading plan is telling us. Right now our trading plan is telling us that we're looking for long opportunities, so we would be looking at one of two things. We'd either be looking for a breakout or we'd be looking for a pullback. And so depending on, and we've talked about those trading methods in weeks past, so if you want to go look at those past videos here on Facebook, go check them out. We talk about how to execute a breakout, how to execute a pullback style trade, and how to do one that's a combination of the two. Looking for the bias and then watching for price to make, if you're in an upward trend, lower highs with lower lows, lower highs, lower lows, and then trailing your entry at the top of that previously closed lower high and with your stop loss at that previous lower low, and see if you can't get a breakout back above that in the direction of that trend. As always, we trade with a stop loss because there is the potential to be wrong, and we will be wrong. We absolutely will be wrong. No trading method ever is going to give you 100% winners. You've got to prepare for losses, and strings of losses for that matter. So always trade with a stop loss. Anyway, over here on the S&P, we're certainly watching 29.40. As the U.S. Regular trading hours begin here in about an hour and 15 minutes, we'll see what happens. Do we continue on and continue this momentum push higher, or does it float back? If we're looking for breakouts, the top side, we'll look at 29.60 and see under regular trading hours. We'll see if we can crack above 29.60 and what that does if we continue moving from there, or if we retrace back to some other key levels. 29.40 certainly was a level yesterday that was respected throughout the day. So we'll see what happens around 29.40, which was that previous high that we have now broken. So we'll see what happens there. Over on the crude side of things, crude's continuing to be on a tear. It's amazing. We're at 32.70 right now, 32.69. Yesterday we talked about looking at breakouts. We talked about looking as we would potentially move above this, certain areas here. Same thing today. Obviously we're in a big upward trend. It's moved a lot already. Looking for a breakout might be, quote, a little rich. At that point, has it already moved so much that can it really move any further? I don't know. Absolutely, it can move further. Will it? Who knows? It might be better to wait and see if we can't float back down to 32.40, which was yesterday's top, or even down to 32.20, which had been here on the 30-minute had been a key point of resistance for us up here. So, there's obviously multiple ways to play this, but if you're looking for breakouts, you're going to have to go pretty high. For crude, I think it'd be better to wait for a bit of a pullback and then see if we can't, continue that current bias, that long bias, but from a lower area. And if it doesn't get there, that's okay. If it doesn't get back to a certain level, don't trade it. You don't have to push the button. Part of trading is patience, which is a big piece for me. It's hard. Patience is hard. Oh my gosh, it's hard to have patience, but you need to be patient, and wait for the key levels to be hit, key setups to occur. So there we have it for crude. For crude, we already talked about crude. For gold, same thing. Yesterday, we've been playing around this 1747, 1750 area, pretty well respected throughout. Once we cracked it, yesterday in regular trading hours, it kind of hung around here, and it's been pretty well respected. In off trading hours, it's now pushed above a little bit more. 1750 though, still setting up as a key level of support for us down here. 1755, is certainly hitting resistance up here. So if we were to look for a breakout, we could look at like 1757 to see if we break above what's been up here. Otherwise, look for pullbacks back down to 1750, 1747 as potential entry points if we're going to look for a pullback. So there it is. I'm going to leave it pretty much with this for right now. I'm not even going to go into the bounce style of strategy. We're going to leave it here and let you guys get on with your day, and I'm going to go prepare for the presentation that I'll be doing later today to teach about Forex trading, how it works, the things that we should be looking at, why we're looking at currency strength as opposed to support or resistance, which I use on futures and crypto, right? So I'm going to leave you here with that and let you get on with your day. So have a great day. If you have any questions, send me a message on Facebook. I'll get back to you. Send me a message, obviously, on the Make Money From Your Laptop. I don't ever friend anybody that I haven't actually met. So my friends list is very, very short on Facebook. But you can always hit me on the Make Money From Your Laptop page, and I'll be happy to chat with you there and help you out. So there it is. Have a great day.